Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, March 1st. Start the new month here, last day of the quarter, or last month of the quarter. So we got a lot to go over today, so we're just going to jump right into it. We'll start off with the personal income for the month of January. So back in December, we had a 0.3% increase in personal income. The forecast is supposed to go up 0.3% and exceed that 0.4%. So great, obviously great news that people are making more money in the month of January. However, we got the other side of the spectrum, consumer spending. So let's see if they're spending that money. So in December, we had a 0.5% increase in December for spending, and then January was at 0.4%, and it dropped off significantly to 0.2%. So people were actually saving more money in the month of January versus spending that money. We also got core inflation. This is the PCE, or personal consumption expenditure. This is the when you strip out food and energy, we get what they call core inflation or core PCE. This is the Fed's favorite gauge for inflation. So this is the main one when we look at inflation news. This is what the Fed's looking at. So back in December, we had a 0.1% increase, and the forecast was supposed to rise to 0.3%, and it came in an expectation of 0.3%. So that's a pretty high number right there. But our year-over-year at the 12-month average still comes in at the same at 1.7. Now the Fed is trying to get it to 2%. That's their target goal, and it's right now it's still at 1.7, even with this higher number here. So definitely want to keep an eye on this. This is part of the reason why the Fed will raise rates to keep inflation getting out of control. Because when you have inflation going out of control, it's everything goes up. The cost of goods and everything goes up too fast, too soon, and it's not good. It's too much of anything is obviously not too good. Now we got some manufacturing numbers. We got the market manufacturing PMI for the month of February. So the December number here, January's number here was 55. Anything above 50 on this index is considered expansion, and it came in slightly lower at 54.2. However, on the ISM manufacturing number, the last reporting came in at 56, and the forecast was supposed to go at 56.5, and exceeded that a lot more at 57.7. So we got kind of conflicting manufacturing numbers here. Market comes in showing it dipped, and then the ISM showing it jumped up. So again, the good thing is that they're both showing expansion in the manufacturing numbers. Also, construction spending, obviously on the other side of the spectrum, we had December went up 0.1%. Forecast for January was supposed to go up 0.6%, and actually reversed. It contracted, dropped 1%. So obviously we want to see construction spending, because especially after yesterday, we'll kind of touch base on that 1 second here. But later in the day, we'll get the Fed Beige Book. This could also be a market mover, as it kind of gives investors an opportunity to look, see what's the conversations taking place behind the scenes in the with the Fed members here, and this is what they kind of look at. Stock market's currently up. It basically is taking its cue from last night's State of the Union address. It's Dow now reached finally 21,000. It's one that it reached in a very fast time period. So of course, be prepared for some stocks kind of pull back a little bit. Now there was no details of the plans he came up with, but again, another broad stroke, but it was well received. Basically, he touched on he wants to come up to Congress, give massive tax cuts for corporations to expand and invest here in the U.S., to the overhaul of the Obamacare, trying to make it more affordable, to create more competition, to more benefits and such. Also, he touched on trying to create $1 trillion for a renewal of our economy, basically our infrastructure, rebuilding the roads and everything here. Obviously, that will help create jobs as well as replenish some of the infrastructure that's been kind of taking a second seat to a lot of the other government spending here. And then he did also touch on deregulation. So deregulation talk, of course, is helping out the banks. Bank stocks are taking off quite a bit, trying to streamline and make it more easy for progress in the economy. So he's talking about deregulation. Those are some of the main points that he touched on today, or last night, excuse me. So let's see how the bond market is. As you see, we've dropped quite a bit. Obviously, there's some good news for the economy, so it's kind of expensive, the bond market. So the stock market's taking money out of the bond market and putting it in there. But also, there's been some tough talk of late. The Fed's Feds have been talking about possible rate hike even as soon as March. So now that's actually jumped up, especially after the speech last night. Basically, they're coming to the conclusion that with all this expansion plans and progress, that is basically no doubt that the Fed most likely will raise rates this coming March, when they expected most likely the soonest would be in June. Now they're saying maybe March, which will be in about 2 weeks. So we could see another rate hike as soon as 2 weeks from now. And a lot of the Fed members have kind of indicated that it's still on the table, that definitely can't discount it, and it's better to be sooner than later type of thing. And then there's also some comments, a few comments about balance sheets. So once you reach a certain point, they might start selling off some of the balance sheets that they have, which is mixed with treasuries as well as mortgage-backed securities. So that could create interest rate hike even further. So that's something we want to keep an eye on. We may not see that till later in the year, or perhaps maybe next year, but that's something you'll probably hear more of later on down the road here. The good thing for us is that we got this pretty big opening gap, so this gives us room for us to be able to come back. As you saw, like here, we had this opening gap here, and look, we closed it following this week here. We got the same thing here where we could come back and kind of close up that gap. But right now we're below the first level of floor level, and now we're coming back to the second level. So it seems like we've been kind of in this range here, between the 102.75 range, and now we're down to about the 101.70ish range here. So we've been kind of floating back and forth here. As soon as we hit down this way, we kind of work our way back up. As soon as we reach this way, we kind of work our way back down. So we've been kind of floating in this range here, which is pretty big. It's almost about 100 basis points, or basically 1 point in fees here, costs here, and that could easily translate to about 0.25% in the interest rate changes here, fluctuations here. All right, folks, sorry for kind of a long one here, but we had a lot to go over today. I hope you guys have a wonderful day. That concludes it. Our rates did go up today. We're currently down about 28 basis points. We started the morning off down here. It was about 38 basis points, but right now we're down about 28 basis points from yesterday's recording here. So anyways, hope again you guys have a wonderful day. Thanks so much for watching. And if you guys want more updates throughout the day, just come over to Twitter. You can find me under Mike Bjork, and I do post updates throughout the day. Excuse me, trying to get that out there. Updates throughout the day there, and stop on by. Have a wonderful day. Again, I'll see you tomorrow. Bye bye.